Hi, welcome back to our Market Mamas channel, everyone. So today is a fun one because it is sort of a combination episode that brings back a previous guest to delve deeper with us into a topic that many of us traders feel really passionate about. The topic that we need to give more time and discussion to was that of utilizing funding companies for trading capital, as we have more to say on this topic, and we released the first episode back on May 2nd, but we wanted to have our friend Phil back so we could get a little bit deeper into it.
Yes, it's a really important topic for all of us traders in the industry. And if you haven't watched that, it got a ton of views and lots of comments. So thank you, everyone. Shout out to everyone who commented and gave us their feedback on that. We really appreciate and love hearing from you guys. So we really wanted to circle back around and welcome Phil back as he was with us before and just gave a really, really good account to so many things that are so important on our trading journey and had a lot of stuff to add to this discussion as well. So how have you been? What's up?
Oh, it's been crazy. It's the crazy market, and crazy life. And I feel like just everything that's going on in the world around us. It's just, just trying to just maintain the way and do the best we can. How y'all doing? You got Mother's Day coming up. So happy Mother's Day to you too.
Thank you. Yeah, Becky and I are super excited. On Mother's Day, we're leaving for a cruise. So on Sunday, we're going to be going on a little vacation together. So it'll be super fun. I don't even remember the last time we saw each other in person at this point. So
we're about to go on another vacation. Last time we spoke, we were talking about always going on vacation.
That's her.
I have to live my best life. Okay.
I'm like, Kendra, teach me your ways.
Life is stressful, so I get away when I can.
They should use a Nike logo. Just do it. So,
hey, Nike, sponsor me. Yes.
Oh yeah.
I feel like we're trying to do the whole work hard, play hard, because with the kids and the jobs and the podcast and day trading, it all feels like every day feels like multiple days in one sometimes, and so I need to get better, and Kendra is a guiding light for me on taking time to do this, because when you hustle, it can burn you. And so we're very excited. We're recording this 2 days before our cruise. And this episode's going to come out after the fact, but it's pretty exciting. It's a way to acknowledge how hard it is, because you get it, Phil. You trade futures too. And so, each trade, there's pressure, there's stress, there's money on the line, there's leverage. And so it's you have to also have periods of the highs, and then you have to have a mellow. So, I'm excited. So are you still, is NASCrack, your baby still, Phil?
The Widowmaker, as I
what do you call it?
The Widowmaker.
Oh my goodness, right?
Yeah, it just because it moves so quick. It seems like just a puff of breeze, all of a sudden it just moves. Somebody was talking about price will just teleport. Just all of a sudden it's here. Seconds later, it's somewhere else. And then there's days where, like today, we're just not moving anywhere. But yes, it is. It's still my poison of choice. And Becky, you mentioned, hey, the trading is hard. And it's funny when you were saying that totally resonates, and it resonates with every true trader out there. They say this is actually one of the hardest things you can ever do, right? Because no one's telling you what to do, right? You're in full control, right? And if you lose big, right, you have no one to blame but yourself. And that's everybody wants to kind of point the finger saying, hey, this market's not cooperating, the platform's not cooperating, which sometimes it does. I'm not saying it doesn't, but and then with funded companies, some people will try to blame funded companies, and some of those claims may be warranted and others really are not. And it's been my experience that no. So I know we're going to talk more about that today. And by the way, fantastic job on that previous episode. I listened to that entire episode, watched it on funded companies. A great job. So I'm hoping to add on to the conversation today and answer any questions as well that you may have as far as funding company goes.
Yeah, so definitely. Let's get right into that then. Tell us about your experience with trading funding companies if you do trade them.
Absolutely. So I started actually with funding companies roughly about, I would have to say, about a year and a half ago. And Since then, I've been funded with 3 different companies. So I've been funded with Top Step, I've been funded with Take Profit, and also with Apex, who you mentioned as well.
Big three.
Yeah. So maybe if you have any questions about those or the differences, we'd love to talk about kind of the experience with that, because it's kind of interesting take. Top Step, was the first company I passed, and that was when they had like the 2 steps like challenge. So you had to go through 2 different iterations, and it was way more difficult than what it is now. But I mean, it just made the achievement feel that much more epic.
Nice.
Yeah, my experience though with funding companies, I wish I had found them sooner than later. And the reason why is, whether you like it or not, I'm pounding my fist on the table. Whether you like it or not, there is an admission fee to trade, to this market, to market trading, right? Everybody has to pay the admission fee. Everybody loses small, loses big, but everybody loses. Losses are just a natural part of the business. And whether you're in a funded company or whether you are trading your own capital, you're going to experience losses. Everybody experiences losses, and you have to accept that. However, how you go about losing is what determines a make or break, right? I was actually listening. There's this program that I listen to every morning, and they talk so much experience. So and I love listening to them as they talk about kind of their view on losses. And there's funded companies they're talking about. Yeah, we see these folks that will go in, and within like 30 seconds they blow out of an account, or as you call it, what was the term that you use? You don't say blow out, you get liquid.
Exhausted.
There we go.
Nicer, right?
Yeah. And so, yeah. And what does that tell you? If you are blowing out of an account within 30 seconds of your first trade, like you blow out in one trade, you're not trading, you're gambling, right? And that really takes us to a certain point of view of what does fund companies represent, and why do I love it versus trading my own capital? Well, first of all, loss mitigation, which Becky talked about, and for me, that loss mitigation is huge, right? Because if you are green, like you don't have any experience, or maybe you're trying out an untested or unproven, or you're changing your strategy, and you say, instead of trying it out on live money that you have sitting in your account versus a funded account, and you don't want to go sim, say, I really want to get that, hey, something's on the line here, then that's kind of a way to mitigate the loss. And the way I put it is like this, because for me, my preferred account size is 150K. And so those are the account sizes that I trade. But when you're looking at it, right, are you really trading a 150K account or a 50K account or 25K account? Whatever the size, the reality is no, right? And it makes me laugh, because there's YouTubers out there, I'm not going to say names, and there's folks that say, oh, I'm trading over $1 million in funded capital. No, you're not. What you're really trading, right, is the amount of whatever the max loss is on the account. So if it's like $5,000, right, on a 150K account, that's it. You lose that, you lost everything. It's not 150K, it's 5,000. But you got to understand what it represents, right? It represents the amount of contracts you are able to trade. And it's a lot of power. And my view of it is it gives you flexibility, and that's something we'll talk about more in a second. But it gives you flexibility to scale into trades and scale out, and also to grow. As you grow the account, you can begin to grow your risk as well. So what it's saying is, hey, today that account has a max drawdown of 5,000. But if you grow that account to $50,000, you can also grow the amount of risk as well. And it's been my experience that funding companies will work with you to allow more of a drawdown. So if you're really that good and you're growing the account, they will actually adjust those parameters for you to say, oh, you know what, you got a lot of room, and you're asking for, hey, I want a $5,000 drawdown or $10,000 drawdown. They will work with you, from my experience.
I mean, their rules actually there's protection in them, and they're designed to foster more successful behaviors by having a trailing threshold, so that you don't just trade and lose $80,000 like that. They want you to grow sustainable practices. And I have found that when I trade within their parameters, I'm like quite pleased with my trading. Like if I use a reasonable amount of size and I get out at reasonable targets and I take a piece out of a larger move, for me as a 3 years deep trader, that feels like a really successful morning. And that meets nicely with the parameters and the growth period that you can aspire to in order to take payouts from accounts. And it actually feels very doable at this stage in my career. And I actually read this thread the other day, and it was saying that they thought that the PAs were rigged to have you lose them quicker. And I was like, the rules are the same. Like, it's just that people are trying to sometimes feel a little bit better about risk and their own execution choices. But I think the crux of it for me is that when I blow an account or exhaust an account, it was my behaviors. And when I look back at the end of the day, I can always pinpoint I over leveraged, I was stubborn, I was cocky, I was trading a context that didn't actually prove to me that that was the day that we were having. And so, I mean, the fact that my exhausted account, well, I learned from that and I can get back in the game for a menial fee because there was this kind of a slap in the face, and it hurts to exhaust an account, but also your trading wasn't good that day is the moral of that story for me, is that I needed to figure out what I did wrong in my trading day and not do that again. So I think that, like you said, when you leverage up and you have flexibility with that, you want to learn the lessons the hard way with the evals and get better.
Yeah.
Yes, absolutely.
Yeah, cool.
Can I add to that list over trading? Right? It's like, oh no, I'm pretty sure I'm right. I'm gonna just try that again and try that again. And no, wait a minute, which way is it going now? Right? And then you're just seeing that equity just spiral on down. I wanted to, if I may, talk a little bit about drawdown, and it sounds like you've heard some feedback regards, hey, the PA accounts or Apex, their drawdown is unfair and stuff like that. Honestly, if you are trading appropriate and in the right context, you shouldn't be getting anywhere near your drawdown, by the way, folks. And I will repeat this because I want to talk about a concept called building an empire. Okay. And I'll talk about that shortly. But what I want to say about that drawdown, all companies have drawdown from what I've seen. Take Profit has a drawdown that functions similar to Apex, right? It's a live drawdown. And you got to know that, by the way, when you're researching your funding companies, is it a live drawdown? That means that as you're trading, if your profit goes up, even if it's unrealized, that drawdown is going to follow. And you have to be aware and cognizant of that. With Top Step, that's the reason why I lean more towards it, because it's not a live drawdown. It does an end of day drawdown. And so if, hey, you made $3,000 of profit, but then you went back down to zero, your drawdown's still the same at the end of the day. It's wherever you end at the end of the day. And so that was nice. What's interesting about the performance account is I was wondering about Apex when I got funded with them, and I noticed that once I passed that 100 or 55 mark, the drawdown stops going up. So
it doesn't trail.
It stops at 150, 100. So that's a huge plus to know, and a relief, right? That you don't have that like that. It's kind of like a dog chasing you, right? Trying to catch up to you. And as long as you're growing the account, that drawdown stops. Once you hit that zero balance. Top Step is the same way as well, right? You hit the zero mark, that drawdown stops following you. So that's a great plus. But at the same time, if you are hitting your drawdown, you really have to take a look. What are you doing with your trading that's causing you to bust out of your account?
Yeah, I totally agree with that. And I think that is one of the things that I really loved when I initially started with funded companies too, is the fact that they do not reinforce any negative trading habits. Like any way you cut it, you only win if you are consistently profitable and you follow the rules and you don't blow your accounts, which, like you said, essentially that is, if you treat that like that is your own capital,
Mhm.
then you and respect it, like fully respect it. But I think it's when you get in the habit of the resets of the just, oh, I just buy another one. And then all of a sudden, like you're not looking at that, whether it's like a 5,000 or 2,500, account, you're just looking at like, oh, it's just $30, $40, whatever.
It adds up.
Yeah. And so again, it's the, like you said, the blame, the personal accountability. I mean, I've said this before, like at the end of the day, we can't control what the market does. And it doesn't matter how well prepared we are. The only thing we really can't control at the end of the day is what we're putting on, what risk we're taking, and how we're choosing to participate. So it's not the funded companies that it's like it starts with us. Like, if you're going to be reckless with the funded companies, you're probably going to be reckless with your own capital as well.
Exactly the point. And that's really the heart of it all, because the rules, right? I think it's even way better than trading your own capital, because you have no rules. Like when do you stop? Right? When do you pull the plug?
No, just keep going down and down and down.
Yeah, and it's a great point to mention, because that's the difference between some of these funded trading companies. And so I'll talk about the ones that I've had experience with. So Top Step has a rule, right? So if you're trading a 50K combine, that if you hit that $1,000 like daily max loss limit, it actually forces you out for the day, but you do not lose the account. Okay.
Mhm.
Apex, on the other hand, it gives you, it has no daily max drawdown. It basically, there's just a max drawdown. No,
Yeah.
you're responsible to handle that on your own. And if you blow out, that's it. You lose the account. Take Profit is similar, where like the amount of drawdown you have. However, with Take Profit, if you hit the daily max loss limit, it doesn't matter if you hit the max, you actually lose the account on that one. So it's a little bit tighter. But the interesting part about Take Profit, when it comes to payout rules, is that Take Profit, you can begin taking profits the first day of your funded account, which was interesting.
Yeah, that's the perk for them.
That is a perk.
Yeah.
Right. On the other side, on the more extreme side, you have Apex. I believe it's more difficult to get a payout, because you have to trade the account for 10 days. You have to hit consistency rule. You have to meet the minimum threshold requirements, and then you have a max payout you can take out for every payout period, and you have to submit the payout within a certain window. So there's more constraints to take a payout, but it is doable, but it also forces a lot more discipline. With Top Step, their rules are like $200 a day minimum is the amount of profit you have to do for 5 days, and then you qualify to take a payout. You could do that 4 times in a month.
Yeah, Apex does have the tightest payout parameters and requirements and time frame, and sometimes, I'm not gonna lie, they're a little sluggish with getting the payouts to you. So, but I do think that in their favor, they are working on that back end, because they've received a lot of feedback from their members, and it has improved, at least with this last cycle that I've noticed. So I think that they're all a little bit different, and you said it best. I mean, whether or not they cut you off or you cut yourself off, the matter of the fact is if you're losing over $1,000, you need to rethink your system and your approach to that day. Because if you really want to be a consistently profitable trader, you got to cut the loser short sooner, and you got to figure out what your setup looks like and how to dial it in and how to leverage up with it. And so, if one of these things is your big struggle bus, putting that on the rules versus putting it on the way that you're executing your system, one is accurate and one is an excuse. And I have made it, like I've had losing days, but I can't. I understand the rules, because it means that you're not being consistent, and in some ways it protects them, but it also protects you. And it may take you a year or two to be profitable trading with a funded company. And yes, you're trading within their parameters, and yes, you're going to have to rebuy some accounts. But through that time, it's just the learning time. And no matter you're trading your real money or funded accounts, you're paying to play. And that's the thing with learning to trade futures. Like we're in college, and the market is the professor, and he's right. And you have to pay for your class, and you have to put in the time. And whether or not you're like losing $2,000 of potentially your own money out of your paycheck from your side job, or you're losing the fees for the counts, you know, you're paying to learn, and that seems reasonable. So, I mean, they're all do have slightly different rules. I like how you laid out some of the biggies there, because everybody is a little different and different things are going to be different priorities to them. And so, you know, research and find your one that fits most with your personality type. And I think that that will help you find a better match for a company to work with. But I've said it before, but I'm a fan.
Yeah. And even within that, I mean, it's just everyone has to find their own system within that system of how they're going to be able to trade the most, you know, safest, you know, and consistent, and be able to respect the accounts and not have it affect, you know, their trading psychology as much. So, I mean, it can be tricky. Like today, I told Becky, you know, I had a great trade in the morning, and then you know, it's Friday, right? So I'm like, oh, I want to like end my week well. You know, we have a trip coming up, and Becky knows, like in the past years, like a trip coming up for me, like I would always mess things up. I don't know why. Like literally my last day before I'm going to take like a week off, I would just mess things up. And so thankfully I've broken that habit this year. And so today I was like maturity. But yeah, so I was like, I had one trade and I was like, I wanted to just, you know, end my day there, you know, I'm good. And then I saw another really strong opportunity, like even better than the trade I had just gotten. But I was risk averse because it's Friday and because it's a trip coming up. And so I ended up just going to Sim and taking it, and it was great, you know, and I was frustrated with myself because I was like, why couldn't I just take that live? And I told Becky, and she was like, well, I pulled off my PA and I traded again in my eval. And I was like, yeah, like I didn't think I should have done that too. Like, I just didn't think like that would have taken off some of the pressure. And then, you know, I could have, you know, taken a stab at that trade, and it was a great trade. But it's like, these are all the things, like the moving parts that I think I know I'm still working out within my own, you know, system, and being able to, you know, still participate, but also, you know, protect, your profits for the day, you know? So it's just, it can be a lot. And I think that we want to have these systems where we do the same thing day in, day out, but then sometimes you do have to, you know, get creative in like how you're going to play your day, whether it's the conditions or whether it's, you know, am I just going to trade maybe evals today? Or am I going to, you know, put my PAs, you know, on the line? So I think that part of it, I still believe, at least for me, you know, is a big factor. But again, it's still better than having all your eggs in one basket of your individual personal funds. So,
yeah. Absolutely. You know, it's interesting you mentioned that, Kendra, because I was listening to some of these folks who've been in the industry for a very long time. They're talking about getting funded, like back in the day. And I'm not sure if you folks heard about this, but you had to put in like $50,000 of your own cash, and then the funding company would provide the other $50,000. So it's like, hey, yeah, you got more leverage, you got more cash to work with, but you also have to play by the rules of the funded company as well. And think about it, right? The barriers of entry have been lowered to such a degree that anybody can become a participant, right? Right now, like Top Step has one for $19, and then Apex has like $30, right? I mean, like that's just silly, right? For the potential and opportunity that it offers. And if somebody says, "Oh, today I only made $300 in a day," I'm like, well, if your like total drawdown is $3,000, basically you're trading a $3,000 account, right? And you're making $300. That's 10%. You're doing that in one day, right? That's actually huge. Look at your 401ks, folks, right? Sometimes you're not even doing 10%, okay? And you're doing it in a day, right? 10% for the year is like, oh man, everybody's like waving flags and right? And fireworks. But that's the opportunity that funded companies offer. And that's what I love about it. It's like, you know, think about it, $30, and you're trading a $3,000 account. How many X is your money going for, right?
Yeah.
Plus, obviously, the fees to start the account. But either way, like you just can't beat that deal. However, it is a bad deal if you have no idea what you're doing, if you have no discipline, right? If you have no discipline, whether you're trading live money like we talked about, or if you are trading a funded account, you're going to end up in a very bad position either way.
It is a safer place to grow your discipline though, because it does cap you, but I would just say in that circumstance, if you recognize that discipline is an issue for you and still being pretty reckless with your rules is something you're working through, you really need to not trade copy at all for quite some time. Like you need to work on one eval. And if you blow an eval in a day, you start again the next day, that's not 20 times an eval. That's one eval. And so it gives you so much more wiggle room financially to fine tune all of those discipline and behavioral risk management elements that you're working on. And it almost just allows you some breathing room to recognize that you're not where you want to be, but you have a safe place to practice with some real skin in the game, which is what these accounts provide you, but without a huge amount of capital of your own behind it. And I like how you can leverage up, because I know that's a part of it when you've been in the Apex, in the funding account game for a little while, like we have been over a year for all of us. And you can learn different strategies of when I see an A+ setup and I feel this in my bones and all of my data is in Confluence, I throw all my accounts at it and I add a couple contracts. I'm not gonna lie. But if I'm coming down off of a trade, or I'm not ready, or I got poor sleep, then I will take a trade, say one contract in one eval. Like this morning, I nailed my first trade and I was in it with some leverage. And so then I was solid, but then I was like, shoot, it's continuing. I'm not the energy of trading that morning and that setup was not out of me. But to manage that risk, then I went to one eval. And so there's ways to tweak it and play the long game. And I think that funded accounts are a nice opportunity for the long game, because you can over time grow your process and futz with it and figure out what system speaks to your personality and slowly start adding contracts and trade copying. And then once you get over that trailing threshold in your performance account, then you can actually grow it bigger. And the ones that don't have that live trailing, it's more opportunities are open to you. And so I don't know, how everyone navigates that. Maybe you have some thoughts on this, Phil, but I think the leveraging up, there's multiple ways to do it. And funded accounts actually provides layers within that you can learn to manipulate.
Absolutely. So when it comes to trade copying, because I want to that's a good segue into this building an empire concept that I heard about a few months ago. And it really just changed the way my perspective of treating funded accounts. I do trade copy, and TopStep has a platform that has a trade copier built into it. It's called TopStep X. They just made it public for everyone. I was one of the first beta users of it, and so I'm really enjoying that one. I also use NinjaTrader and I use Replicanto actually. So all these plugs. So companies out there, sponsor Market Mamas. But I use that to trade copy, and that's how I can trade copy actually all three different funded companies at the same time. It's pretty cool. But the whole concept of trading up or building an empire, I should say, is start with one funded account. Get that pass. Focus on honing in your craft. If you can pass that and work on getting a payout, just get a payout. Once you get that payout, what you need to do, if you want to build, okay, then you got to focus on reinvesting that and getting in your next account. So now you have two. So this begins to scale pretty quickly, right? Now you get payouts from two accounts. You start building. Now you get another two. And kind of that concept, right? And soon you can start building it up. But at the same time, you have to also remember your risk. So when I was hearing this concept, he was saying, you know what? I only risk 1%, right? 1% of the account. And for me personally, right? Kids don't do this at home, but between 5 to 10% of the account is what I risk. But that definitely beats what some people are throwing out there, 50%, right?
Yeah.
Yeah. But basically, I have this philosophy, if I'm not profitable between 10 trades, that means I need to reevaluate. And that's a shot that I give my eval account is 10 trades, right, to get to where I need to be. So that's the whole 10% concept. But what you do is you start building these up, and then you're ready to trade copy. But just coming out of the gate and saying, I'm only gonna buy a bunch of accounts and I'm gonna trade copy them. Boy, if you're not losing the money in your regular account, like trading account, you're gonna lose them in funding companies, because you're just gonna be buying and buying and buying. Give me that 10 in one shot, $30.
Yeah,
300.
that really ties into what Becky said, which is there's really this defining factor between are you using these companies to help you your long game, to help you consistently, grow and compound not only potential profits, but your skill set, your execution skills, your ability, your trading edge, or are you just coming at it like, oh, there's this great opportunity, I could buy all these accounts, and it always sounds so lovely at first. Like we all fell for that. Like we can buy up this many accounts. We only need this many points a day. That's all we need. Of course we can get this many points a day, right? And then before you know it, you've made it completely about that quick money and not respecting the game that we're actually in. So I agree with both of y'all. Great
Absolutely. I know we're almost out of time here.
No. Last word, Phil. What else you got? Last bit.
I wanted to say something about risk and scaling it. Okay. Just remember, dollar-wise, right? What are you risking as a dollar-wise? Is it 2%? Is it 5%? Whatever it may be, there should be a dollar amount tied to that. So what I do is I scale into my trades, right? I put in like 2 micros because yes, I do trade micros, and I scale into my trades. And why is that? Because I first want to establish a foothold. This looks like it's going to work out. Then I start adding contracts, right? Until I meet, and until I get full on the size, which is I'm risking my dollar amount, right? The max dollar amount that I want to risk on a trade. And if it's not working out, it's like, I don't know about this trade. Then I'll begin, scale out or get out of the trade, and I minimize my loss, right? But at the same time, it creates an opportunity that you can set multiple targets, and you can begin scaling out of a position.
Yeah.
Scale in, scale out.
Mm-hmm.
Love that. Mm-hmm. That's a great approach. And then it also helps you stay focused on, okay, is this initial trade still playing out, reading your data, and then it adds to your confidence overall. If you can hold a trade longer, then, and feel like you accomplished more, versus just like hurrying, getting in and out. So I love that approach. And that's definitely my style that I'm trying to continue to evolve it to, because I love that. I love being able to get in a trade, see it, prove itself, add to it, like, where it just comes natural. Like you're like, okay, past that small resistance. Okay, let's add on. Like we're moving, like then it finally takes off. And then it just, of course, along the way, it's going to stop a little bit. People are going to get out and you're going to have to hold longer. But if you've already, had some of your targets hit, then it's like, we'll let it run. So thanks for sharing that. Yeah. So.
Yeah, we love that. Like lock in profit, and then you can protect as you go. You can inch up your stop loss. And like, there's ways that once you get into it, you can start taking advantage of a full move, but protect yourself along the way and lock it in case something weird happens or whatever. Like day trading can, you said, like it can move really fast sometimes. So that's really smart. Phil, thank you very much for coming back with us. Like we love talking to other traders and like having these discussions. We got a little bit into the technicals today, and we are kind of like haven't so much with Market Mamas yet, but we're going to start dabbling a little bit here and there because day traders is our love that birthed this podcast. And so like, this was a really fun conversation. So thanks for coming back.
Hey, thanks for having me, and a pleasure to see you too as well, and continue doing what you're doing. It's awesome. Keep it up.
Thank you. Well, part 3 will be on the way, I'm sure. But it was wonderful. Thanks for being on again. And Market Mama community, thank you again for joining us and watching our episode today. Thank you, Phil. And as we always say, our best trading days are ahead. Take care.
Yes. And belated Happy Mother's Day to all the mamas.
Yeah, this episode will come out way after, but we still love you.
It's the vibe for us right now.
Yeah, it is.
All right. Take care, everyone.
Bye.